Good evening, everyone. This is Matthew GS UK. Hope everyone's had a good weekend. We are currently 11th of August. It's currently 7:44 p.m. in the UK, and this is episode 4 of the 51362 EMA strategy. Now, before I start, I have some good news to report that I think I've finally fixed my mic issue. The problem, after many YouTube videos, changing many different settings, and I was pulling my hair out really of why I was still getting this crackly popping kind of sound with the mic, and it just wasn't sounding good with my nice expensive headphones on. And the reason was because it was a dodgy USB port. So the USB port, I have currently 4 on my laptop, and I was using one of the ones on the left hand side and didn't realize that it was a faulty USB port. So as soon as I switched it to another USB port on the other side of the laptop, done another test, and it seems all good to me. There's no real crackly or any popping sounds, so it's sounding pretty crisp to me, to be fair. But let me know if that is not the case, and I will investigate further. But anyhow, let's dive straight into this strategy. So if you're not already, please join the free Telegram group that will be linked in the description. I did call for a buy. I was bullish on US 30 around, we was around here. And I was expecting price to go on a bullish run because we've been on a massive bearish downtrend for quite a long time. There's a lot of imbalance to be filled. So I was expecting to go in a bullish run. For anyone that doesn't know what imbalance is, it's when price moves very, very fast and it creates order blocks within the candle that needs to be filled. Price will always return back to this area to be filled. I have done a video on imbalance and I will link that up here somewhere. But anyhows, I did call the buy, and I think I called the buy as soon as the 5 and the 13 EMA crossed over. However, price had different ideas and it wanted to go for a liquidity grab before going bullish. So I think I went in for a buy here. I think I had a stop loss there, and I think I had a stop loss there as well on my twin trade. And what happened was price has gone for a liquidity grab, or it's gone for the pullback. It's taken out all these buyers. It took me out, and then it's started to reverse. And then we've got another 513 EMA crossover. So I jumped straight back in for 2 buys here, and I'm currently in this trade at this moment in time. And my alert actually didn't go off, so I was on the free plan for TradingView. You only get 1 alert, and my alert is currently set to only go off when the 13 EMA is tapped. And the 13 EMA was tapped here. When I say tapped, its price has gone through it, and I received no alert. Now, I'm not one that stares at the charts all the time. I do have a little look now and again because we are on the 4-hour time frame, so we do get a bit of time to see how the trades are playing out and seeing how the market is. And I actually saw that the 5 and the 13 crossed over just by me looking at the chart, say every 4 hours, because that makes sense. If just look at every 4 hours, a new candle is going to be formed, obviously on the 4-hour time frame. And when this happened, I did go in for the couple of buys, but my alert did not go off when it hit the 13 AMA, and I thought, oh, okay, that's a bit odd. And the reason why, because I don't know if you know this, but when you're on the free plan, the alerts do actually expire. Now, I created this on the July the 3rd. As you can see here, it says stopped, expired, and it said it was triggered on August 1st. So I think you only get a month of the alert, even though I've set the alert to never expire. Like, it will constantly go off when it meets the correct criteria. However, because I'm on the free plan, it does expire. So it's just TradingView's clever way of trying to get you to basically go for a paid plan. Now, I did mention on the last video that I was going to go for a paid plan because you do get, I think, 20 alerts with the basic plan. You're never going to get these alerts expiring as well, and it means that I never have to look at the chart unless the alerts go off, which is perfect really. So I have just signed up for the TradingView basic package, which means I do get those 20 alerts, which is going to be great. So what I'm going to do right now is just set up the alerts on US 30, and I'll show you how that is done. So download, if you haven't done so already. I mean, if you're following along, you should have this indicator ready, but it's the 51362 clouds. If we just click the more button here, we go add alert, then we want to have, I would say, US 30 crossing, and then we want to cross the medium EMA, which is the 13 EMA, and we want to set that up as once per bar. And I'm not going to go through all of these again because I've already gone through that, so you'll have to watch the series, but this will be the first alert. Okay, if we come back here, as you can see, this one's active. Let's remove this one now because we don't need that there anymore. And then now, because I'm on the basic plan, it's going to give me 20 alerts. So let's create another one. So what I'm going to do is I'm going to set the EMA cloud short EMA, and whenever this crosses the medium EMA, once per bar. Okay, this means that whenever the 5 EMA crosses the 13 EMA, I'm also gonna get an alert. Okay, which is perfect. So I would get an alert here, and I would get an alert here if I was in this alert and this played out. Okay, so if we just come back to here, got those 2 alerts active, perfect. Then the next alert is, I would say, price to cross the 62 EMA, which is the long EMA, once per bar. Long EMA, so that is the 62 EMA, is the Fibonacci 61.8, and this is a good alert to have because potentially what could happen now is price is bearish. We are now looking that we're going to go on a bullish run. There is imbalance to fill. However, price could still be bearish, and price could react off the 62 EMA. So what it could do is react off this and then continue down like this. Yep, just by hitting the 62 EMA and then continuing down. So this could potentially be a good sell-off. There's could carry on bullish. So to play it safe, if the, I mean, there's 2 ways you could do this. You could sell now because it actually has tapped the 62 AMA. Can you see how it's actually tapped it already? So it would have got the alert. So you could have sold right there, and then your stop loss could have been just above the 62 EMA. And then who knows, this could go on a really nice continuation on the bearish trend downwards. However, Price could go up, like I said, but to play it a bit more safer, you could wait for the 5 and the 13 EMA to cross over again on the bearish side and then sell when that happens. So it's just reacting on what you feel is best, really. And the other thing is to always paper trade first with this strategy. And at this moment, I am bullish on this, but it all depends on what we got for next week, and that news could factor in with this. Earning reports for US 30, the biggest companies in America, are going to have some say in whether the market is going to be bullish or bearish. And I will go over some of these videos in the future on how those news can affect the markets. But US 30 is looking quite good. And let's just jump straight over to gold. I did cover gold on the last video. I think we bought the 513.62 crossover here, caught that buy, lovely move up, and then when price crossed the 5 and the 13 crosses, you could have took your profit there and then gone in for a sell, and catching the sell with a take profit here. And I believe I caught this move down here. I think I did. I think I caught this move here, which was great. And what I'm going to do now is I'm actually going to set up the alert for the gold price crossing the medium EMA. And then I also going to set this to the short EMA crossing the medium EMA. Okay, so moving forward, my alert is gonna go off when this crosses, and also when price taps the 13 EMA. So let's see. So the alert would have gone off there, and now I've got the 513 EMA crossover. My alert would have gone off here, and I would have caught this bullish move, which I'm currently not in, but now I've got the alert set. I could have caught that. So moving forward, and also we do have the 513 and 62 EMA crossover. I'm just gonna actually, just because I've got so many alerts, I might as well take advantage of them. Actually, saying that, you can't do... No, yes, you can't do the 3. So we can only do 2. So we can't actually set an alert for all 3 EMAs crossing. However, what we could do, just by looking at this, is we could have price with the 62 EMA. So we could go when price is crossing the 62 EMA. So that means that as soon as price crosses the 62 EMA, I would get the alert. And then when I look at the charts, I'd be like, oh, okay, well, price has crossed the 62 EMA, and all 3 EMAs have actually crossed over as well. So I'm going to go in for a buy. However, I would have had the alert go off here anyway, but now that we've crossed the 62 EMA, we should be good, because we are bullish and we're only going to be looking for buys now. Jumping over to the crypto markets, and I'm loving this strategy with Bitcoin. Bitcoin has been great. I've caught this move here. So we was on a bearish run, and there was some really good trades to catch. Like, check this out. Price is below the 62 EMA. It's come up. It's hit the 62 EMA. It's also hit the 13 EMA, and I never caught this trade, but that would have been a beautiful trade to sell right there, and then twin trading it and catching this massive move down. That would have been absolutely beautiful. So what I'm going to do is I'm going to set my alert for when price crosses the medium EMA once per bar. So I would, okay, it's just gone off right now because the market is actually live. Crypto is obviously a 24-hour market. Indices and the Forex, it does close over the weekend. So just bear that in mind. So I would get alerts there. I would have got alerts there, just going down. Yeah, so that would have been beautiful. And then also I'm gonna do add an alert crossing, so the 5 and the 13 EMA crossing over. So I would have got the alert here. However, as I was looking at Bitcoin, I actually caught this move anyhows from here, and that was a really great trade that I caught. Now price has broken the 62 EMA, and now we are now at the area where price is actually the 5 and the 13 and the 62 EMA look like they're all going to cross over now, and the 5 and the 13 is about to cross over now. So this might be a good sell opportunity to get into right now. That'd be interesting to see if price does continue going down. I might go in for a sell now for this because it's just met the trade criteria. Like when your trade criteria is hit, you need to really take the trade regardless. There should be no thinking about it. You just got to take the trade without thinking about it. Just have to have trust in the strategy. So Bitcoin's looking quite good. And then just going to go over one more, which is the Forex, one of the majors, which is EURUSD, EU. And we had a beautiful 513.62 EMA crossover here. So that would have been great to buy there and catch this move up, which has been great. And then as you can see, price has the 5 and the 13 has crossed. So you could have sold here, take profit at the 62 EMA. It's actually tapped the 62 EMA, and then potentially we're going to go on a bullish run. So if you had an alert for the 62 EMA to go off, you could have bought there as well. So I'm just going to set my final alerts for EU. I think that's more than enough alerts for myself at this moment in time. As a beginner, I wouldn't say to have this many alerts, but if you're going to go for the paid plan, why not? But maybe it's a good idea to only stick to a couple of pairs. So I'm just going to have to go off on the medium EMA, and then I'm going to set this to go off on when the short EMA is crossing the medium EMA once per bar. Now, I have recently, like I mentioned, just signed up with the TradingView basic plan. If you are interested in signing up with TradingView as well, just to get those 20 alerts, not worry about your alerts expiring if you're liking this strategy, I have partnered up with TradingView, so I am an affiliate. I will link the affiliate link for myself in the description. I really appreciate it if you was to sign up with that link, because it would just help me out a little bit. And I will, yeah, like I said, I'll link that. Just click the link, sign up for the basic plan. That's all you need. I wouldn't say you need the other plans, but if you wanted another plan, that's up to you. You can also do some good back testing with okay, this bar plate isn't available for this chart type. Let me see if we can do it for is it because it's the 4-hour time frame? It might be because it's the 4-hour time frame. Okay. That's interesting. Bar replay isn't available for this chart type. All right, let me look into this, but the bar replay is pretty cool. You can, when you do some back testing, you can say, right, you can click there and you can say, let's see what happens moving forward if my alert went off here, for example, and then the market would play out. It's a shame I can't get that to work at this moment in time, but I will be using that because it's pretty cool to show you as I'm teaching. So that's it for today's video. Just a quick catch up on the trades, few markets to look over, few updates. I'm now an affiliate with TradingView, so please sign up with the affiliate link in the description if you want to get the basic plan. My free Telegram group will be linked, and my broker will also be linked if you're thinking of depositing funds. My broker is really good, so if you wanted to do that, you can sign up with them, and then that'll give you access to my VIP group. So hope this video has been helpful for you on part 4 of this series, and happy trading. I will see you in the next one. Take care. Bye.